Very good morning. You're watching India Market Open. I'm Tamanna Inamdar. Of course, Niraj Shah with me. And we're looking at another good morning. I reckon, Niraj, 23,600 today also coming in. Vodafone, the big story. The Vodafone stake sale in Indus, the big story. So a lot to talk about, a lot to unpack.
Yeah, and more importantly, just that the total quantum of bulk and block deals plus QIPs in a single day, Tamanna, shows the extent of the market. This is today. Today we will see fundraising worth 22,000 crore rupees. This is telling of a market that you could argue is on steroids or what have you, but the appetite for paper is just so strong. Quite something, really.
That is interesting. You have, and you're right, apart from Vodafone, which is going to be the big one, I reckon will also increase the quantum of passive flows that you will see for the day. So that is one to look at. And absolutely, it's giving us a sense of a market that is definitely buoyant and adding more depth as we go along. In fact, global cues are also fairly positive. And of course, Nvidia is the big story there. So anyone with FOMO factor can only feel worse today looking at the kind of run-up Nvidia has had. But positive close in the US, S&P 500 ends at a record high. Dow, Nasdaq both closed up. Dow futures mildly in the red. Story is Nvidia, though, has become the most valuable company now and has beaten Microsoft. Remember, it outpaced Apple a few days ago, in fact, and now again has become the most valuable company, even ahead of Microsoft, was up 3.5%. And that really, the story of Nvidia is also the story of what is happening in the US markets in that sense. The AI play, the tech play, the semiconductor play, all of that is taking center stage, even as rate cuts and rate cut concerns or even economy, in that sense, moves one step back. Now, why am I saying that? Look at the retail sales data, which has come in for the month of May. And good news for bond yields, because bond yields have simmered down because of them. But the fact is that if May retail sales were up 0.1% versus an expectation of 0.2%, April sales were revised downwards. It's telling you about consumers who don't really want to go out and spend. Eventually, for any bull market, it's unsustainable if you don't have consumers that don't want to go out and spend. That's the story on Wall Street. Frankly, that's the story here in India as well. So that's one figure to look at from a slightly more longer-term perspective. Bond yields is something we should pull up. The 10-year was at about 4.219 to be specific. So that is good from an India perspective. Crude prices jumped up mildly, I would say, compared to what they have been, but then retraced after that. The point is that summer is expected to have some constraint on inventories, and supplies could be a little constrained, which is why Brent is up above 85 once again. Though most experts don't see this sustaining in any real way. I mean, the days of very, very high-priced crude may be behind us for some time. Let's quickly pull up Asia and see what's happening with Asian markets. Mixed last I checked, but mostly in positive territory. For India, the implied open is looking at a positive start and a pretty good start. We might hit 23,600 today at some point in opening trade or in the first bit of trade. So that's going to be interesting. I pull up fund flows as well. So second consecutive trading session, because the last figure we had was, of course, Friday, when FIs have come in and bought, not massive quantities, but 2,569 crores, DIs 1,556 crores. And remember, you will see that figure even bigger yesterday because of all the block deals that we've been talking about. So the setup in terms of, global news at least looks positive. Niraj, and I reckon that that's the case for domestic news as well, with budget becoming the big precursor. Before you get into it, I just wanted to, there's this report that the budget might see putting more money in the hands of taxpayers. And I don't know if that really comes true, but that could be interesting as well.
Yeah, I mean, all through the years now, a month before the budget, there are some 50 stories that come out, and like 45 of them, who knows, let's see. But I think the story for today has to be what banks are doing and what banks did yesterday, because the market's momentum is strong, and there are quant indicators which are now saying that there are toppish signs or signs of topping out, if not now, then in the near term. But what might just give the further leg is what banks are doing. So for the longest time, banks have been in this consolidation pattern, a large pattern, if you will. 48,000 was the earlier resistance, then 50,000. And it became very difficult to almost an aspiration to break 50,000 and settle higher. Bank Nifty broke out of that consolidation pattern yesterday, settled comfortably above 50,000. Now, will Bank Nifty drive the next leg of the market rally upwards? This was the intraday move yesterday in the Nifty Bank. But if you look at the 1 week chart, look at that. It's just been in this consolidation pattern and this sudden big burst that came into the Bank Nifty yesterday. Now, and remember, we were talking about how HDFC Bank and Reliance were aiding the Nifty the whole of last week. Yesterday didn't take an HDFC Bank to do this, but some of the others to do this as well. So there is a bit of a burst that has come into the Bank Nifty, and this may actually propel the index higher because you need banks, or you needed banks to really participate. And look at that yesterday. There's an IDFC, Bandhan, ICICI, Axis. HDFC Bank was behind in the list of gainers. So watch out for Bank Nifty in the session today. And the last point on, from a sectoral perspective. So one, the markets will go higher. Banks might lead the rally as well. But the one sector that has kind of been under the radar because, defense has taken center stage, and rightly so, in the eyes of everybody by virtue of the moves that they are making. But you've got to look at auto ancillaries. It's a smaller pocket. A lot of them cater to defense, by the way. A block happening in Sansera today. It has got a defense angle. Bharat Forge, auto ancillary name largely, but it's got a large defense angle. So auto ancillaries, which are probably catering to defense or electric vehicles or otherwise, are actually doing very well. RK Forgings was up 8.5% yesterday. Bharat Forge might react today, by the way, on account of the $40 million investment that it is making as well. So auto ancillaries have been under the radar, but the moves in some of those have been pretty stellar. Watch out for Sansera today once the block deal is out of the way, and we'll talk about this a bit. But the limited point I'm making is there are a lot of these auto anchs which are seeing some very strong moves, and therefore you've got to keep a keen eye out for them. In addition to, of course, what's happening in PSUs and defense.
And the point of auto anchs, twofold tailwind there, right, Niraj? On the one hand, like you said, some have a very clear defense play, and all things defense are, skyrocketing to the moon right now. But also the entire EV play comes in as well. And there's going to be a big push there, policy-wise, undoubtedly, and you will see auto anch stocks react. But I think stock of the morning that everyone's focusing on, and I'll start with that on the stocks to watch list, is Vodafone, Indus Towers, and I might as well throw in a Bharti Airtel as well, just because it is right now the largest shareholder in a company called Indus Towers, which is India's largest telecom tower company, and Vodafone is selling, Vodafone Global the group is selling about 18%. We must correct that. I had mentioned it. It was 9.94% stake, but it is now 18% stake. They have upped the amount that they are offering as per a Bloomberg report this morning. So Vodafone will now sell 18% of its 21.25% stake in Indus Towers. It's effectively an exit from the business. The stake sale opens today. It's set at 310 to 341 rupees per share. Now, it's not clear whether they will use those proceeds to settle dues of Indus Towers. If there is any hope of that, you will see a positive move in Indus Towers. Clearly, Vodafone will be impacted since a huge block is being sold. Bharti Airtel actually on the sidelines of this entire story because they have about a 48%, 47.95% share. Do they pick up some stake will remain to be seen. But, Vodafone is an interesting story to track in any case. What they did a few days ago, and we flagged it off on this show itself, where you're offering equity in lieu of what you owe to vendors, has also been an interesting marker in their strategy to pare their debt and raise funds to actually be able to compete with the other two large players. So we'll see how this one goes. That's one that I would keep on your radar, definitely. And of course, there will be a more detailed conversation in just a few minutes on Editor's Cut on it.
Yeah, just that Indus Tower could become such an important one because, people love clean out trades, the large of the block deals happening, going out of the way. Independent of what happens today, does this clean the pathway for Indus Towers to actually move higher going ahead? And I think that might be a real possibility. So,
you reckon Bharti Airtel will want to increase its stake? Maybe not.
Yeah, because I think a month ago they came in and made this statement as well, apparently, that we don't intend to put in more money here. So, interesting to see, but Indus could be really interesting.
So Indus, Vodafone, both you should watch. Wipro is the other one. So Wipro, remember, had a very good day yesterday. Now the company in aftermarket hours has come out and clarified reports of a multi-million-dollar deal from Standard Chartered. They're saying this is inaccurate. These are rumors. We don't have this deal. It's based on rumor and speculation. That stock was 3% up yesterday. So you might see a sort of reversal in that sentiment on Wipro. So that's one I'd watch. Bharat Forge is the other one I wanted to talk about, and Niraj mentioned it briefly. But apart from the defense play, apart from, the broader industries, auto anch, all of that play, fact is that they've made an additional investment of about $40 million in their American unit, which is a wholly owned subsidiary of the company. The funds to facilitate this capital expenditure for the aluminum forging facility. So that's what they're doing it for. And the investment will be completed by June 21st, 2024. It's an additional investment of $40 million. So you could see an upside in a Bharat Forge today as well.
Yeah, and Tamanna, that piece, Amit Kalyani comes and speaks about how the non-auto anch business is doing well. This Bharat Forge aluminum business, up till March 2022, hardly any turnover. FY23, if we take that year as a reference point, $22 million. FY24, the turnover, $60.73 million. It has grown at a rapid pace, and therefore, if Bharat Forge is showing that inclination and confidence of putting more money to work there, it should or it could be construed as a positive. So watch out for this one. Tamanna is right, as a stock that you would want to focus on in the session today for sure. So that is one. But it's a day, like we said, which is marked by 22,000 crores worth of fundraise in a single day. I think this must be some sort of a record for multiple deals. But Tamanna spoke about Vodafone and Indus. There is Gland. Fosun will sell about 5% stake in the company via block deal. The floor price is set at about 1750 per share. Not a whole lot off from the price, about 90 odd points, which is about 5 odd percent, right? So that's okay. The other one is Sansera, and why this one is important because it's a large stake, 11.7. This was a large VC fund waiting to exit for a long time. A lot of people were circumspect. There was a Nomura note on Sansera speaking about some very good prospects and the stock should do well. But what ailed it was this large block possibility. The street knows that there's a block in the offing, and therefore the price will not be jacked up too high because the block may come any time and bring the price lower. Now that has happened today. The only point is Sansera seems to be confident of the deal happening because the discount is not really 10% odd. It's just 0 to 5% range. Once this block is absorbed, I think there might be some optimism around Sansera as well. So watch out for this one in the session today. It's a large deal and therefore could see a corrective move, but it gets absorbed well. If it does, then the stock may actually react positively. So difficult one to trade really, but watch out for Sansera. It's a large deal and it's a clean out trade, which usually augurs well for stocks.
And just because we're talking about fundraising, Craftsman Automation is the other one that I wanted to talk about. Again, in that space that we've been highlighting since the morning. The board has approved raising 1,200 crores versus a QIP. Floor price of 4,426, which is, by the way, a discount of about 7% to yesterday's closing price. Watch out for Craftsman Automation. And just wanted to highlight, since we've been talking about financials leading the pack today, potentially interesting Bernstein note out on it. On IndusInd Bank, they have initiated coverage, watch out for IIB, with an outperform target price of 1,800 rupees. That's a 28% upside. The reason Bernstein likes IndusInd, they're saying it's a quasi-NBFC, given its loan book composition and a weak deposit franchise. They're well positioned for a potential rate easing cycle and has high exposure to attractive segments. They've also initiated coverage on Muthoot, target price of 2,000 with a 14% upside, and say they see a long and shiny road ahead for gold loans. Considering gold prices have been on the up and up, bad news for a stock like Titan, but at least for a Muthoot, What else? If you can't buy, at least go and use the rest of your gold. So maybe gold loans will also go up. But focus this morning on Vodafone.
Yeah, no, just before that, actually, there are a few other stocks. By the way, Titan, Citi's open a negative catalyst watch as well. But there are a few other stocks that we should highlight. Speaking of bulk deals and block deals, ZF Commercial, Wapco Asia is going to sell about $171 million of shares via a block deal. So this is the fourth block, by the way, Vodafone, Gland, Sansera, and ZF Commercial. So 4 blocks. And there are 2 QIPs. So one of them is is Craftsman Automation, which Tamanna mentioned. The other one is AMI Organics, and AMI's QIP is open as well. It's going to raise up to 400 crores via QIP. The indicative floor price is 1240 rupees per share, which is a 5.4% discount to last closing, and a dilution of 8.6% to the pre-issue capital. The funds will be used for debt repayment and capex, etc. But watch out for AMI Organics as well. Again, 5.4% discount, not very large, but large enough. Let's see if there's a reaction there. And the third one, which we learned from informed sources, will be open. Don't have the data on that one as of now, is All Cargo Logistics. So watch out for All Cargo as well in the session today. Speaking of fundraisers, Zota Healthcare, the preferential equity and warrants issue is done for Zota. Let's just bring up that stock. We may not have the details, but viewers can hear this. So 50 crores of pref equity and 151 crores worth of warrants at 509 rupees per share for Zota. The prominent investors include the like of Mukul Agarwal, Ramesh Tamani, and Vikas Khemani. So watch out for Zota. Could see a bit of a reaction. Remember, the deal is happening at a discount to the current market price, but there are prominent names there, so could be interesting. And last but not the least, and something that we should speak about, because it's just come in the last few minutes, that JLR has made an investor presentation on the exchanges, and they've given out an outlook. So JLR is saying that on FY25, they anticipate strong ongoing financial performance and continued progress on reimagined strategy. They expect FY25 revenues to the tune of £30 billion, EBIT margin of over 8.5%. Now, this is something to take note of course. They continue to maintain that outlook. Investments of about £3.5 billion and a free cash flow, again reiterating that £1.8 billion free cash flow as well. And they expect FY26 EBIT margin at 10%. So they're talking about growth on the EBIT front meaningfully. And remember why this becomes important, because there is this whole talk of what Maruti might do with hybrids, whether or not that happens. There is a Hyundai IPO, and the biggest IPO in Indian history by size, presumably, coming in. JLR making its presence felt as well via an exchange announcement. I'm not saying they did it because of that, but it brings Tata Motors firmly in play. And, for all the talk, Sajid was telling this to me yesterday, that for all the talk of how Tata Motors has done so well in FY20 or 2023, the best performing stock in the calendar year, the PV business globally is at a discount to the Hyundai IPO. Yeah. And that's something.
Now, so just one bit on JLR, what I've also found interesting is their pivot very clearly, the tie-up with Chery and the collaboration in China. So that's a smart move from a JLR's perspective. They are, doubling down on the electrification of China. And while we talk about EVs globally in the context of Tesla, that's just, more of a ornamental, cool sort of thing. The real EV play is going to be and is in China. And the fact that the Freelander brand is getting completely redone. They're going to make in Changshu, they're going to use Chery's EV architecture and then have this whole portfolio of EVs in China. So down the road, I don't know if some of that technology makes its way to India, because EV is the next game. So JLR and then by extension, Tata Motors also one to watch out for today.
Yeah, most certainly. I mean, autos stay in focus. This one is no different. Remember, a lot of auto stocks in focus today, so that's to be kept in mind. But as Tamanna said, I think the focus should be squarely on one of the largest blocks, if you will, Alex.
It's going to be a busy day for the deal makers today. I think they're earning their keep for the entire year, one would think, based on the numbers that you've already spoken about. But the hallmark of a good seller, a good merchant, is to be able to gauge the market and to sell you more than you probably need. And so, therefore, based on the information that we had this morning, where we thought that the Vodafone Group was going to be selling about 9-point-something% stake, that is now nearly doubled. So it's good work by the merchant. Let's talk about the implications, though, right? Because this is something that is confirming what has been building for some time. Everybody knew that the stake would be sold. And initially, they had said that the entire stake practically would be sold. That is coming to pass. What does this mean, first of all, for Vodafone Group and Vodafone Idea? And I think a lot of shareholders, retail shareholders, would want to know about that.
So, if you look at the shareholding of Indus Towers, roughly 48% is held by Bharti and remaining is held by Vodafone. So 21% is held by Vodafone PLC, the Vodafone Group, what we call it. They're selling off 18% of that stake. Actually, they upsized it from 9 to 18 overnight because of the demand. That's what according to Bloomberg. But what it means is that there are two folds that happens. The entire stake held in Indus has a pledge against bank borrowings of Vodafone Idea, and it also has a liability with respect to any payments which are not paid by Vodafone Idea to Indus as part of the tower sharing dues. So these two are the major things which are the liabilities for Vodafone Group. And if you look at the tower sharing part of it, it's capped at roughly around 6,500 crores. And for the 1.7 billion euro loan that the Vodafone Idea has, the liability is roughly around 4,500 odd crores, which is there, which is capped at 4,500 crores. So
11,000 crores.
So 11,000 crores is the maximum cap. So this money would first bring in cash flows to Indus, because the payments which have not been paid by Vodafone Idea would be paid, and it also is likely to reduce the liability of Vodafone Group, and they may be paring down the stake, the guarantees they have given for the Vodafone Idea, because at the time of merger there were loans which have been there for Vodafone, and they had given a bank guarantee, and that's carried forward.
So out of 16,500 crore, already 11,000 crore has been marked aside.
It's a cap. Sure. Exact amount Vodafone should be able to tell, but if you look at the investment value of Indus Towers on the books of Vodafone Group, it's roughly around 9,800 crores, which is there, and they're selling it much above 16,500 crores, the current value at the discount what we spoke about. And so it is going to be a cash flow to Vodafone Group as well, because I think in July their annual meeting is coming in, and before that they would have exited these assets. So they've made it very clear that the payment of these liabilities will be done through monetization of these assets, and that's what they have done. So at some point in time, they may also try to sell some of the stake in Vodafone Idea, but it's not clear at this point in time.
Because the question right now, Niraj, is whether or not the proceeds of this will be used to infuse some funds into Vodafone Idea. And here Sajid is talking about exiting.
So I stand on the shoulders of Sajid and UBS to make the point that I want to make. So what this overall fundraise means for Vodafone Idea, right? Now, one, of course, the obvious question, could the proceeds be infused in Vodafone? But the more important, which Sajid has partly answered, the question is whether it could be lower than anticipated, because almost everybody believed, will the whole capital go? Obviously, it won't, because so the UBS note says that Vodafone rights subscription to Idea back in 2019 was funded via debt, for which stake in Indus was pledged. Now, UBS view is that Vodafone Group would likely settle this $1.8 billion secured loan, right? So therefore that is out, and therefore their view is that potentially, if this entire stake is done, and by the way, remember, this is happening at what, a 40% premium to the 12 rupee price that used to exist just 2-3 months ago, before GQG and some of the others put in the money, right? So in some sense, there's a premium here to the earlier believed numbers, but their assessment is that potentially up to $500 million could be infused into Vodafone Idea. So from a Vodafone Idea perspective, we not got to Indus, and I am just using the numbers of brokerages. Sajid has the more updated numbers, but purely from a perspective of what it means for Vodafone Idea, fund infusion into it, settling of some of the debt, and more importantly, the prospects of more capital coming into Vodafone Idea, it being able to repay some of the dues to Indus, etc., is all a part of an ongoing story. To my mind, this one is not as big for Vodafone Idea as it might be for Indus.
Quick question: 500 million. Is it based on the previous expectation of the stake sale, or is it the
now the current expectation?
So the 500 million is the same for the 4,500 crores, which is the liability capped against the bank loan, bank borrowing, which is there. But look at from the point of view of Vodafone Group, they have carrying value of nil on the balance sheet for the stake, and they don't want to increase that carrying value. Typically, they have 29% or something, 23.2% in Vodafone Idea, and that values that brings in a loss, Vodafone Idea loss of roughly 4.52 billion on their books, which they haven't recognized. So the moment they put an equity, they will have to recognize that losses as well.
So there is a strong argument against,
right? So they're not going to recognize that 4.5 billion euro of losses of Vodafone Idea on their books, because their carrying value is there.
But so Sajid, what does it mean for Vodafone shareholders today? I
Vodafone
think Alex started
Idea.
with that premise.
Yeah,
Vodafone Idea shareholders.
So
Vodafone PLC, we figure.
Two things it brings in. It brings down the liability of Vodafone towards Indus Towers, and eventually
Vodafone Idea.
Vodafone Idea to Indus Towers. That's one thing. And the second thing is that it frees up a little bit of headroom in terms of credit they can take from the banks and other stuff because of the liabilities and other stuff. So we've been talking about Vodafone Idea trying to raise up to 25,000 crores in debt, and they've been in talks with many other places, and it's not coming through.
Not coming
so
through.
this will open up some of the headrooms for
Vodafone
Idea.
Reduces.
For Indus, there's two things. One, it gets the money which Vodafone Idea owes, and the second, they will resume the dividend payment, because they've stopped the dividend payment because they were not getting money. So for the shareholders of Indus, especially Bharti Airtel, it will be a thing.
Does Bharti take ownership, as in majority ownership?
47.9% is the thing. The Indian promoters, which includes Indian companies which own Indus Towers, is roughly 51%. 3% is still owned by Vodafone PLC. So my assumption is that over a period of time, Bharti will buy out Vodafone PLC stake so that it can get 51% and consolidate into Bharti.
Did Bharti come out and said they didn't want to infuse more capital into this? Sorry, Alex, did you hear that?
No, not capital, but if you're getting, Indus price went up by 45% in the last 3 months, and over 73% in this year alone. In the last 12 months, is around 120% has gone up, right? So there is a capital appreciation which is there, but there's an opportunity for Bharti to consolidate as well.
I just have one point on Indus Tower, really, to my mind. And again, of course, this is something that one of the other brokerages has also put out, but that proceeds will, of course, used to pay off the Vodafone PLC lenders and so on and so forth, etc., and stuff like that. But if a large overhang of a large block on Indus, and this is a large one, right, goes out of the window for Indus Tower. We've seen brokerage notes talk about a target price northwards of 450 as well. The reason why the stock, after having this heady rally for the last few weeks, has been sluggish, Indus Tower has been sluggish the last few, is because of this belief of this block, or the knowledge of the block. Now that this is out of the way, right, and if the belief is that Vodafone might clear some of the dues, etc., so on and so forth, does this, post the block, bring about the much needed relief for an Indus Tower shareholder? Never mind the rally that has happened, because also remember that while Indus, and Sajid would have a better handle, but that's my last point, while Indus Tower has had a bit of a rally in the last 12 months, Indus Tower for the last 5 years has been a stock that's virtually gone nowhere. If you think of it, can this be the catalyst for the further uptick for Indus Tower?
Niraj, tower businesses per se are like annuity businesses, right? But this company is not acting like one because of the liability of Vodafone Idea. So the liability, if it goes away, it starts generating cash and comes out as dividend.
Simple. There you go. So the way that I'm seeing it, even if there is no infusion into Vodafone Idea, it's still positive for them from the perspective of the dues getting cleared and the opportunity to raise debt. And it is certainly going to be a positive if any money comes in. It is definitely going to be positive for Indus Tower because dues are getting cleared again, and Bharti Airtel might just consolidate. So that's, I think, the sum and substance of this conversation. Let us know what you think, and are you going to go out and buy any of these stocks? Let us know in the comment section and what you think about the current prices. We have to head into a very quick break. There's more on the other side, particularly to do with setting you up for trade from the perspective of the F&O queues. Do stay tuned.
Welcome. This is India Market Open. We're taking stock of the futures and options space now. Well, we've seen more strength on the benchmarks, and the Nifty has moved higher. And along with that, we were also seeing an increase in open interest as far as the June futures is concerned. The Bank Nifty, very similarly in moving in tandem, we've seen it move higher and in fact edging towards the mark of 50,400. We see about a near 4% increase in open interest towards longs there as well. Well, as far as the option markets are concerned, yesterday was a day of trade where we saw the Nifty hover around 23,500, 23,600. That's where we saw a lot of activity as well. But if you consider the overall open interest distribution picture at the moment on the higher end, keeping an eye on 24,000, considering the accumulation of calls there. On the lower end, watching out for 23,300, 400 and 500 puts, where we do have fairly equal amount of distribution coming in. Of course, today is also the Bank Nifty expiry. We'll be keeping an eye on the 50,500 mark because that perhaps could be a little bit of a pivot in today's day of trade. Finally, coming down to stocks, let's talk about a handful of names here. We do have longs in Alchem Laboratories and Canfin Homes, and of course, unwinding, or rather, declines in Grasim, United Spirits and Havells. And of course, in terms of unwinding, keeping an eye on names like Trent, GMR Airports, MGL and Power Grid, looking at about a short covering. Remember, Trent, as we also have a Motilal Oswal report this morning, suggesting a further upside, 8% upside from current market levels. But on that note, let's get in an expert to see what sort of calls we have going into today's day of trade. Well, we have Shilpa Rath of Prabhudas Lilladher, who's joining us on the show. Shilpa, good morning. Thank you so much for joining in. Well, let's start off with your call on IRCTC. What is your analysis here, and how are you playing this one?
Good morning, Agam, and thank you for having me on the show. Talking about the setup for stocks, particularly in IRCTC, I believe it has a very strong strength now. And the sustenance above 1020 for the stock is quite positive, wherein you can see the move towards 1070 to 1100 also coming in. So I believe the setup is very positive and with a favorable risk-reward ratio.
Okay, that's IRCTC. And the other one is Crompton. Shilpa, what is your call here?
Crompton also, if you see from the past 4 to 5 sessions, it has seen some steady strength in the stock, and the resistance of 420 is also now breached and sustained very strongly. So as long as we are holding 420 levels, the stock has a lot of potential to test 445 to 460 zones. Okay.
Well, there you have it. Those are two stock strategies from Shilpa based on what she is thinks that it is looking interesting. Before I shift focus back to Tamanna, once again want to very quickly take a look at the Nifty and the kind of key levels that we are keeping an eye on. Shilpa, taking your view here, what are we keeping an eye on here?
Agam, if you talk about indices, we see that Nifty and Bank Nifty both have been, showing some robust strength, but particularly since yesterday, Bank Nifty has given a breakout above 50,200 zones, which has been for quite some time a hurdle. So this sustenance here is showing some strength for the index, and particularly being the expiry also today, I believe there is a good trade for Bank Nifty. 50,500 might act as a resistance. So playing out here with a long straddle, I believe is a very nice one to go about. One can buy 50,500 put and call both the same strike. The call is trading at around 120, 125 rupees, and 50,500 put trading at around 220. So cumulative, the net outflow for you would be around 350 rupees. But I believe, one side, a sharp movement can come in for Bank Nifty today, since the consolidation phase has been over and it is showing some sort of, strength to move for another 400 to 500 points today. So any one side will benefit here. So, in that case, the trade could be very profitable.
Right, Shilpa, thank you so much for joining us and taking us through your views on the markets and also giving us a handful of trading ideas. Let's move on and in fact, talk about the Nifty and the Bank Nifty. Of course, when it comes to the Bank Nifty, today we're watching out for the 50,500 mark. There are two ways that this can play out. Now, given the fact that the implied volatilities are on the decline after last week, I reckon that there'll be a lot more participants in the markets who will be looking to perhaps buy into this falling VIX, because naturally the premiums are a lot lower. That said, of course, there is usually plenty more activity in terms of writing these options, where you tend to see a lot more participants go and write those out of the money options. So at the moment, of course, when it comes to the Bank Nifty, because of the fact that these indices have a positive bias, we're most likely to see a lot more writing around the 50,000 put. Naturally, we're still not far away from there, which is about 1% away from there. So it still becomes a little bit of a risky bet if you do, in fact, go ahead and write that one. And, you know, we may not even expire around the 50,000 mark. We may expire at 50,100, 50,200. But through the course of the day, if we do see some amount of weakness, there's this aspect of a sudden spurt downwards, which at least some who may familiar with the option Greeks may suggest that gamma burst. Well, that may in fact lead to a substantial expansion in your option premiums, which is why a lot of traders who in fact write these options, which are further out of the money, which need to take care of and be careful about. Of course, 50,000 at the moment is the base that we're working with when it comes to the Bank Nifty, and that's something that we're going to keep an eye on in today's day of trade. On the higher end, of course, keeping an eye on the 51,000 mark, which is about a good 3% away from current market levels. So that is something that a lot of traders will potentially think about. Maybe down the week, not necessarily today. On an intraday basis, 50,000 is what we're keeping an eye on. With that, Tamanna, it's back to you.
All right, thank you for that, Agam. So interesting day, 51,000. Possibly on the Bank Nifty, 23,600, looking very doable on the Nifty as well. But we're talking about financials today with a focus on life insurance. Digant Haria is joining us. He's founder at Green Edge Wealth. Digant, great to have you on India Market Open on NDTV Profit and speak with you once again. So we wanted to start this conversation off with what was a very big story last week and want to understand your perspective on it. Of course, once we have you, we want to talk all things financials. But I'll start with the life insurance bit and the surrender value conundrum. Now, just a couple of lines for our viewers who are tuning in. IRDAI has proposed better surrender value terms to protect consumers and policy holders. This is after multiple drafts. Now, the question is, what is going to be the impact on life insurance companies? Digant, HDFC Life saw a positive response from the street simply because they came out and they were very clear that the hit to our margins is going to be about 100 basis points. Do you see in the long term surrender values not having too much of an impact?
Morning, Tamanna. Good to be here. See, this life insurance, the surrender value thing was probably, the last bit of, our big regulatory arbitrage that they had, which needed some sort of normalization or, for it to come in favor of the actual policy holders. So I think, this whole regulatory tightening started 2 years back, when the taxation on ULIPs had changed. And, after that, we have seen multiple rounds of tightening by the regulator. I think this is the last leg. This leg hits the insurance companies the most. Because, all these insurance policies are 5 to 20-year policies or sometimes, even 30-year policies. And in between, a lot of people, end up saying, oh, we don't want this policy. They don't pay. And then they end up earning like 2 to 3% kind of returns on the policy instead of a 5-6% kind of an IRR. So that was, like a good contributor to the margins. HDFC Life, they always had a reasonable amount of non-participating products, what we call as the new age, higher margin products, whereas someone like an LIC has a lot of those traditional products. So someone like HDFC would have 100 to 200 bips impact. Someone like an LIC can have a slightly higher impact of this. But all said and done, this was overdue, Tamanna. This had to come someday. It was very unfair on the policyholders' part to bear such a big loss, compounded over such a long period of time. So I think it's a healthy change and probably the last leg. The sector has underperformed quite a bit over last 3 years. I think we are setting stage for, some bit of revival in this sector, say 3 to 6 months later in time.
So an interesting way to look at it. You said LIC could have a slightly larger or higher impact then HDFC Life. What do you reckon it could be? And focus on LIC also because it is the largest, has the largest market share. It is still the biggest player. Do you think LIC could also see this revival that you're talking about? Because if we're talking about underperformers in the space, then LIC is also on top of that list.
Yeah, but see, LIC has slightly different structure. So LIC gains from two things. One is if it is able to sell more policies, but a bigger component to the embedded value of LIC comes from the movement in the equity markets. Okay, because a large part of their gains in the equity portfolio, they eventually, sit in the embedded value of LIC. So LIC will do good, if the markets do good, I think LIC will do good irrespective of this hit which comes from the surrender value policy changes. But yeah, LIC will be more linked to what the market does. Like if tomorrow markets correct 10%, in the next 1 year, you will absolutely see very little movement in the embedded value despite them writing new policies. So LIC is slightly different, I would say. But the key for LIC would be to move a little away from their traditional products and get into more participating products where they don't have to share all the fund upside with the policyholders. That is a slow process. I think only 5% of their business comes from that. They have some targets for this business to go to 10 and eventually 20, but they've just taken baby steps. So I think I'm bullish on the whole sector. If somebody takes a view of 6 to 18 months, and yeah, I think HDFC Life on the private side, LIC on the PSU side, a good combo for investors to take in this overheated market.
Overheated market indeed. Okay, Digant, the other aspect, and just moving on from insurance, Niraj here, good morning, is just the start of what seems to be a banking rally. A lot of funds coming out with the NFOs as well, and talking about how while banks have largely been immobile, if you will, maybe, just maybe, we might have a start of a private banking up move too. Is there merit to the argument of private banks finally making a move? And is there growth to back that?
Morning, Niraj. We have been talking about this for almost a year and a half. The private banking space has been absolute laggard. The valuations have corrected so much, and every time we feel that, okay, this is the only pocket which has not gone to madness or, to levels which we can call expensive. So while that is true, Niraj, on the fundamentals, valuations are fine. Maybe now the elections are over, so you will see the liquidity in the system improving. So the deposit tightness that we are seeing, that may also come off. Credit cycle is benign in India, for private PSUs, for almost for all sectors except microfinance and personal loans. So, this sector can rally, but I still think, Niraj, that this sector was so overowned in the last decade that if the FIs don't come back meaningfully in India, which after elections also they have been net sellers, it will be very difficult for these large four to rally. Specifically Kotak, HDFC, they still have some issues to be sorted out. HDFC in terms of merger, Kotak in terms of the regulatory ban that they have. ICICI Axis can probably do better, but again, they're very, very overowned. So you need the whole liquidity thing to improve. The fundamentals are fine, Niraj. There is no problem with the fundamentals of a lot of these. But yeah, I think, the FIs have to come back. So us, the fundamental analysts and investors, we just keep on praying someday the FIs will come and stop selling these private banks, because till they sell, you can't expect a very big rally in this sector. So it's highly overowned in the last decade.
So Digant, in which case, in some sense, sorry, I'm just trying to get this. Would you be a buyer in insurance but not be a buyer in banks?
I would think so, Niraj. If somebody wants to play financial sector, being underweight on private banks will not be a bad strategy, because for private banks to move, there's a big variable, which is the FIs have to come in a reasonably big way, or they have to stop selling what they've been doing for the last 3 years. Whereas insurance is quite a bottom-up sector that, the growth is bouncing back, the regulatory tightening is over. So if you ask me, general insurance, life insurance, something different like, say, a gold finance, these things make much more sense than, putting it in the large four private banks. At least that is the view that we are carrying, Niraj.
Let me take that forward with you, Digant, because interesting note out by Bernstein, and they talk about Muthoot. they like Muthoot, they talk about Bajaj Finance, and they talk about IndusInd Bank. And, all three interesting names because you're in the financial space, but you're not the big private bank kind of play. Let me start with your take on Bajaj Finance.
Yeah, so Tamanna, see, Bajaj Finance was the leader when it came to, the physical buy now, pay later model. Like you go to a Vijay sales and you buy your TVs and all that. They are leaders. Like they still have more than 50% market share. But then Bajaj Finance lost a bit on the online. Now a lot of shopping has moved online. So in that online space, they are just one of the many players. They are not leaders. And which is why, we saw that last 2-3 years, Bajaj Finance, the stock has struggled. Their earnings and the growth trajectory has also come off a little bit. Their growth is coming from entering into traditional products like microfinance, tractor finance, car finance. You would expect Bajaj Finance to do all the latest high-tech things, but actually Bajaj Finance is doing all the very, very traditional things to grow. So which is why I feel that, you will not see that valuation excitement in Bajaj that we saw in the last decade. But yeah, having said that, 3 years of time correction is done. Stock is at, say, 4.5 times F26 book. So not a bad play. But again, this is going to suffer the same fate as large private banks. If your Axis, ICICI, Kotaks of the world are going to run, only then Bajaj is going to run, because more or less all these have similar kind of ROE profiles and the technical setup on the shareholding side. So Bajaj Finance, I will not rate it different from, say, an ICICI or an Axis for an investor.
Okay, so then what do you think are, those when we're talking about the next leg of this bull run? Obviously, it can't move ahead without financials. What are the 2 or 3 pockets and picks that you see as really having that upside?
Yeah, so one of them could be this whole insurance space, general and life both. We spoke about it. Second could, in this financial space, second could be, this the gold lenders. In gold lenders, Muthoot Finance is obviously the largest of them. They have the tailwinds from gold price moving up. And then regulator has also punished a lot of these gold lending companies for bad processes that have been followed. So Muthoot Finance is one standout. And I think that private banks will still continue to lag PSU banks. We had an election scare and PSU banks have been going sideways since then. But I think on an ROE basis, you will still be surprised by, what the PSU banks can do versus the private banks. So I would still say that, having private PSU banks is a better option, and probably they are the ones who are going to lead the market and not the private sector banks.
What's your top PSU bank favorite, Digant?
So the best company is SBI, but probably the best stock could be Bank of Baroda, because it has underperformed and there's some kind of RBI restriction on it. Once that goes away, I think that could probably outperform the other PSUs.
All right. Thank you, Digant. Always a pleasure to chat with you. Digant Haria there with a very comprehensive view on the financials landscape. Liking the insurance space better than your frontline private sector banks necessarily. And I thought that was interesting. Niraj got quite a contrarian view that unless that FII money comes back in truckloads, private sector banks may not move that much.
Yeah. And actually, in some sense, that's probably the most logical way to think about private banks as well. Let's see for how long they stay valuable versus they're starting to move ahead. But so that's on financials. But beyond financials, there's a market at large. A lot of blocks today. Bank Nifty doing well though. Sudeep Shah, Deputy VP, Head of Tech and Derivatives Research at SBI Cap Securities. On the technicals and the derivatives, Avinash Gorakhshekar, Director of Research at Profit Mart Securities on the fundamentals. Gentlemen, both of you, thanks so much for joining in. Sudeep, we were talking about financials at large. Banks showed a bit of a spunk yesterday. Can they propel the markets higher? Would you be long here?
Good morning, Niraj. Looking at the Bank Nifty, what we have seen is yesterday there is a strong breakout. Now, last 5-6 sessions, we've seen Bank Nifty consolidating between 49,600 and 50,200. And yesterday, for the better part of the day, the Bank Nifty sustained above that 50,200, 50,300 mark, giving a sign that that selling zone now has been completely absorbed, and we might see a uptick in Bank Nifty from here on. From a short-term perspective, see that 10-day and 20-day exponential moving average, despite the consolidation in the last week, was not compromised. So I feel that zone will act as a strong support going forward. Also, and positionally now, I feel 50,000 zone will act as a strong support. And on the upside, we might see levels of 50,900, 51,200. We might see a new high also on Bank Nifty. So all in all, I'm bullish on Bank Nifty because if you decode the banking and the financials, all these insurance names, they have been moving well in the last several sessions. It's only that the space of private banks and specifically these 3-4 banks which have not moved. And yesterday there were first signs of a breakout on the upside within this short consolidation of this previous 5-6 sessions. So yes, I feel that with 50,000 as a support, we are eyeing at 51,000, 51,200 in Bank Nifty in the next couple of weeks.
Okay. So, with the presumption that you playing that trade as well, what is the trade outlook, Sudeep, and what are the stocks that you're recommending for the session today?
There are a couple of stocks that I like now. From the banking space, yes, HDFC Bank and ICICI Bank can outperform because if you see HDFC Bank, that is doing well since last several sessions, and it is this particular stock which has at least supported Bank Nifty while Axis Bank and ICICI Bank were consolidating. So HDFC Bank could outperform going forward. 1580 kind of zone could act as a strong support. It can act as a stop loss, and on the upside we feel levels of 1650, 1660 could be seen in the next couple of weeks. There are a couple of stocks that I like. Now yesterday, if you see, DMart has given a strong breakout on the upside. This stock has given a 2 to 3 month consolidation breakout. The stock was consolidating between 48 and 4900 and 4400 for a good period of 3.5 months. And yesterday there was a strong breakout back with volumes. So I feel from the current levels, demand can be bought with 4,960 as a stop loss and 5,200 as a target on the upside. There's one more stock that I like from the mid-cap space, that is Radico Khaitan. Now here also we have seen a decent consolidation breakout. The stock has been reversing since the beginning of June, and previous 5-6 sessions, we've seen some consolidation also in this stock between 1690 and 1740. And yesterday there was a breakout back with strong volumes. So from the current levels, we feel 1740 can act as a stop loss, and this can be bought for a target of 1860 and 1900 on the upside.
Sudeep, just to talk about some of the specifics, and we'll get an Avinash as well, but I just want to get your sense on Vodafone and Indus. Let me just start off with that because those are the stocks that are going to be in focus this morning. How are you looking at them on the charts?
See, on the charts, you see Vodafone has been consolidating since the past few days, and for a better part of April month, the stock was consolidating between 12 and 14.5 zone. And towards the beginning of June, we've seen a breakout on the upside. So I feel currently the trend is looking good in Vodafone Idea. 15.5, 15.7 zone could act as a strong support until the time this zone is held. I feel there could be a decent upside, and we might cross the previous swing levels, swing highs also of the last couple of years. And 21, 22 is the zone where I feel the stock could head up to in the next couple of months. Now, coming to Indus Towers, here there was post that big move that we have seen in the month of February to April. The stock has been consolidating in the last couple of months now. So overall, I feel for the stock to move ahead from here on, 353, 355 zone, which is a resistance for the good period of last 1.5 to 2 months, needs to be crossed for it to move up to 375, 380. So 355 is that level I am eyeing for as a crossover level. And on the downside, 325 will act as a support.
Avinash, good morning. I just wanted to get your take on Indus Tower and Vodafone, the big story this morning in terms of Vodafone Group's exit actually of its stake in Indus. Do you see it as a positive for Vodafone till we don't know what exactly they will do with the money?
Good morning, Tamanna. I think clearly, markets are quite positive on Indus Towers. I think if you look at the performance of Indus Towers in the last 2-3 quarters, they've been doing remarkably well. And I think Vodafone's decision was expected from a long time. I think the broad indication is that the money received from Indus Towers sale would use to partly repay the debt part. The company has also taken a board resolution to raise some funds to, repay some debt on the books. So I think the markets would definitely be a little comforted because, debt issues for Vodafone continue to be quite high. Any reduction in the debt is definitely a good sign because that would actually lead to better cash flows. And I think markets are hopeful that at least in the next, say, 2 to 3 months, if ARPUs increase and if, subscriber additions start moving in the positive territory, then that should benefit Vodafone. Indus Towers definitely seems very well positioned. Maybe today's block deal could see a little bit of knee-jerk, reaction on the stock. But I think it's a good opportunity to accumulate the stock in case the stock opens in the negative, because typically we see that whenever such block deals are executed, initially the stock, trend is weak and thereafter it recovers. So I think we are positive on Indus Towers. Vodafone, I would believe that, at the current level, it can only consolidate. So it's not a buy. We would suggest a hold.
Okay. Avinash, just quick. Actually, let's take a break on that note. We'll come back from the break and try and talk more about some of these. Try and remember, it's a big fundraising day. As we speak, Sansera, the blocks have already happened. The stock has just reacted or maybe reacts a little bit. So let's wait and watch what happens in the pre-open session to Sansera, Indus and a few more. We'll be back in just a moment. Right, back with India Market Open and in conversation with Sudeep Shah and Avinash Gorakhshekar. Avinash, sorry, you made this point about Vodafone and Indus. I just wanted to understand from you. Are you constructive on Indus medium term? Would you believe post this block there's a possibility for Indus moving higher over the course of the next 6 months?
Yeah, I think, Niraj, we are positive on Indus Towers. Our sense is that Indus Towers, is in the tower, renting business. And I think it's a unique play in the segment. Obviously, I think, numbers also have been quite comforting. And I think FY25 should also be significantly better. We expect a better rollout, a better tenancy ratio. And I think, obviously, margins should improve in the coming year.
Okay. And speaking of bulks and blocks, like we mentioned, Indus expected, Sansera already happened, a few others. It's a day of a fundraise cumulatively by India Inc., if you will, of close to 22,000 crores in a single day, actually more than that. And my colleague Anushi, who's looked at all of these block deals as well as QIPs, joins in with a quick summary there. Anushi, good morning.
Good morning, Niraj. So, a bunch of block deals in focus today. So, first one on the list is Gland Pharma, wherein Fortune Pharma, which holds up to 57.86% of stake as of March 24, is looking up to diluting about 5% of its stake in the company by offering up to 8.2 million shares. This is at a floor price of about 1,750, which showcases about 4.8% of discount compared to yesterday's closing price. Next is Ansera, as you mentioned, the block already happened in 5 large trades, more than 10% of stake dilution that we have seen. This is from its client EBIN, which offered up to 9.38% of stake, while CIGP, also the EBIN fund, also offered up to 2.2% of additional stake via this, again diluting the completely entire stake that they held in the company. Next is ZF Commercial, wherein Wapco Asia is selling up to 2,142 crore worth of stake in the company via the block deal. So this is higher than the earlier, what they came out with earlier, which was up to 5% stake, and the offer was up to 1,423 crores. There were even some key bulks which happened yesterday that were in focus, which includes Kalpataru Project International, wherein they sold about 5.35% of stake, and Agrotech Foods, wherein Pari Washington in India Master Fund sold up to 4.5% stake. So both these Kalpataru projects and Agrotech Foods were closed below 4% in yesterday's closing sessions. Again, you mentioned about QIPs. We had 2 in focus. One is the Craftsman Automation that is in focus. So and Ami Organics coming out with its 500 crore of QIP. So these are some of the bulk blocks and QIPs that remain on focus for today.
Okay, well, watch out for some of these as well. Some pretty strong deals in the offing today. And like we said, Sansera is probably happened already. In fact, if the flashes go, so 10.7% of equities changed hands already in Sansera. And look at that stock up 4.5%. I mean, early days as yet, but keep an eye out for this one. Actually, fundamentally, Avinash Gorakhshekar, even if Sansera would have started lower, let's assume, I'm just trying to understand, is it a stock worth investing, or would you stay away? Because auto ancillaries have been in focus in the last few days.
No, Niraj, I think, we believe that the roadmap and the runway for growth for Sansera is very solid, considering the kind of order book they enjoy. And I think, interestingly, their new facility caters to the defense, aerospace sector. So these are high growth sectors. So our sense is that, most of these components are going to be machined components. And I think, considering the kind of order book and the growth opportunity, it would not be surprising to understand that FY25 should be a lot better than FY24. The management commentary has also been quite encouraging, and I think the stock took a little more time to get re-rated. But I think at these levels, there are a lot of funds. Hopefully, this bulk deal which has happened, we would be coming to know that who are the buyers, by the evening. So that would also give a little more stability and comfort to the market. So I think any decline definitely could be a good opportunity to accumulate. I think we are expecting stronger numbers for FY25.
Let's take a look at some of those other block deal candidates in the pre-open session, whether it's Vodafone. Let's see what Vodafone's doing, Indus Tower. In fact, Bharti Airtel was doing pretty well last I saw it. Vodafone hasn't moved too much right now. Indus Tower is about 2% down. Bharti Airtel, last I saw, seemed pretty decent, unchanged now. M&M, another mover in the market today. Let's pull up M&M, about 1% up. And Bharat Forge. Now, Bharat Forge is investing $40 million in its American subsidiary. That stock 2.5% up. Avinash, wanted to get your take on a Bharat Forge. Considering if I look at it from the defense point of view, the auto ank point of view, it seems well poised. But in relative terms, it's not like the stock has done as much as its peers. Would you look at a Bharat Forge constructively right now?
No, I think Tamanna, Bharat Forge definitely qualifies as a long-term portfolio candidate. But the stock has moved up also quite significantly. We expect the defense business, the aerospace business, and the oil and gas business to contribute significantly. One thing which is very clear for Bharat Forge is that they continue to remain market leaders in the axle segment, especially for class 8 trucks. And that is something which I think the markets always monitors these numbers. But I think in the domestic market also, key players like Tata Motors have given a very strong, robust kind of guidance. not only for the domestic market, but even for the JLR, segment. So indirectly, I think there is definitely going to be a big basket of opportunity for players like Bharat Forge. So I would believe that, Bharat Forge operates in the heavier forging component segment. So that way, I think they should definitely do well. But yes, valuations are not cheap. I think they are fair to expensive. So any decline from here could be a good opportunity to accumulate.
What about you, Sudeep? How do you feel about Bharat Forge on the charts?
See, looking at Bharat Forge on the charts, the stock has been outperforming since the last several months, and now what we feel is that from the current levels, if you see the zone of 1650, 1640 will act as a strong support. The stock has broken out on the upside above that previous swing high, and now is sustaining above that zone since last few days. So I feel now going forward, 1650, 1640 looks to be a very good support. And we feel on the upside, 1780, 1800 levels can come in the next couple of weeks.
Fertilizer stocks also in focus this morning. Just want to pull that up in the pre-open session. Just a couple of minutes left for that pre-open session to end. Look at RCF, look at Chambal Fertilizers, GSFC, Deepak. All of these stocks doing fairly well. Fact, once again, up in the green at least. And RCF leading the pack 5.5% up. So fertilizers in focus. We'll ask Sudeep and Avinash about it, but let me first go to Mahima for our 9:05 segment on the top brokerage report of the morning. Yes, Mahima.
Right, Tamanna. So MOSL has come out with a note, which is a thematic note on jewelry, and they're saying that jewelry sector has been experiencing a trend towards formalization now. They're saying that organized market accounts for 36 to 38% of the total jewelry market compared to 22%, which was there in FY19. Now, the total jewelry market reported a 8% CAGR revenue growth during FY19 to 24, reaching a market value of almost 6,400 billion. The organized market clocked around 18 to 19% CAGR revenue growth, and Titan, Kalyan and Senco accounted for almost 20% of revenue growth from 19 to FY24. They anticipate going forward an ongoing rapid shift in the consumer sentiment. So consumer will be more skewed towards buying from the organized channel rather than the unorganized channel, and factors fueling this trend are increasing ticket prices, enhanced shopping experiences, and greater product variety. Now they're saying that franchisee based model is also something that is helping these organized players as asset light model enables a faster reach. And finally they're saying that jewelry store penetration is at its peak, driven by small jewelers, and offers a significant growth opportunities for the organized players. They've initiated coverage on Kalyan Jewellers with a target price of 525, which is an upside of 23%. Senco, again a buy initiative with a target price of 1300 with an upside of 27%, and Titan, they reiterate to buy with a target price of 4150 with an upside of 16%. So this is the overall view of what Motilal Oswal has come out with, and these are the top 3 picks in the jewelry segment.
Interesting. Thanks a lot for that. So Motilal bullish on Titan. At the same time, Cities open a 90-day catalyst, negative catalyst watch on Titan as well, with a target price, I believe, of 3650 or thereabouts. Okay, pre-open rates have settled, and we should just mark some of those stocks on which there was those large blocks, right? So Sansera is one. There is Indus, so that is number 2. Sansera is up 5% on open. Indus Tower 4.5%, 329. Remember, the base price is at 310. That happens sometimes. The base price is 310. So that's the second one. There is Gland Pharma, and there is ZF. ZF is flattish. Gland is actually 1.5% higher. So maybe that deal too has gotten subsumed. And by the way, Indus Towers, the deals are happening thick and fast as well. Watch out for Indus. So it's starting off lower. Sudeep, a word on Indus Tower. A lot of people would be interested in trading this. At 329, it's starting 4.5% lower. What do you do with this one?
Niraj, I feel we should be waiting at least for one day. I see overall the stock is in a medium-term uptrend. Long-term also the trend is fairly good. But in the short term, as I said in the beginning also, that last 1.5 months, we are seeing the trend being tapering off from higher levels. So, and maybe this was because of this block deal also, which could be in the offing. But Now, at least when it is opening around 329, we need to see whether the stock is once again crossing 340, 345 on the upside, which can now become an important resistance. And on the downside, the important support zone will be closer to 314, 315. Because below 335, 332, the next support directly comes closer to 319, 320. So I feel that zone will be important because that is that zone in mid-May from where it had reversed post hitting 365. So 319, 320 will be that number that I will be eyeing for. And for the first couple of hours, I feel we should just wait and watch and then see how the trend is developing there.
Okay. Sudeep, by the way, remember viewers, Indus Tower, the block deals are happening thick and fast, so we'll keep on reporting on this. Sudeep, you gave a very good call last week on GMR Airports. That stock was up about 4.5-5% yesterday as well. For somebody who went long, would you take money off the table or would you stay long?
No, Niraj, I won't be taking the money off the table because see, it's after 4 months, 4.5 months, the stock is broken out on the upside because the stock initially hit 90 plus levels in February beginning. And since then, last 4-5 months, the stock has been consolidating in this 78 and 91, 92 kind of zone. And a couple of days back, we've seen that breakout. And yesterday, there was a strong volume-based buying. So I feel the current level, even at the current levels, if someone is holding it since the past week or from lower levels, what at the best one can do is trail your stop loss to 94, 95 levels, and I feel levels of 102, 104 can be witnessed because the strong momentum is there with this counter, and with the kind of mid-cap buying frenzy we are seeing, good quality stocks will always find takers. So I feel from the current levels, one should hold with 94 as a trailing stop loss.
All right. Your pre-open rates have settled, and we should just look at where we're sitting. We're looking comfortably poised to open above 23,600. I know new highs, etc., is just what we see every day, but to note what's happening there. We talked a bit about fertilizer stocks a few minutes ago, and I want to get a view on that from Avinash. Avinash, that definitely is a theme this morning, whether it's FAT, RCF, the whole bunch, Deepak, Chambal, all of them are doing very well. Do you see this as a pre-budget kind of an up move? Because if you had to pick a segment of stocks that will see some budget impact, perhaps fertilizers would be on that list.
Yeah, exactly. I think Tamanna, the coming budget could possibly boost rural, markets by announcing some soaps for fertilizer companies. I think within the fertilizer space, integrated players like Coromandel, RCF, or for that reason, Chambal, these are definitely companies which should benefit because they have a very large geographical base, a very wide product kind of basket, and I think a very large, customer base in terms of the farmer reach. And most importantly, there have been some news reports that possibly some GST meeting is going to be lined up, and there some GST kind of related issue also could benefit these fertilizer companies. So I think budget is definitely a big trigger. I think we do hope that rural India is going to get some package, and that could possibly include some benefits for the fertilizer companies, so that these companies obviously benefit, but the end user also indirectly gets a better kind of a pricing kind of benefit, as far as their usage is concerned.
All right, very quick call, Sudeep, on the fertilizer pack, top pick as per charts.
There are two stocks that I like. One is FAT that is broken out yesterday on the upside with strong volumes now. It was consolidating since last 3-4 months, and yesterday there was a strong move on the upside, and now it's closer to its Jan swing high. So I feel that should be taken out. So overall, 840 as a support and 930, 950 levels on the upside can be seen. And another stock that I like is RCF that is already opening gap. So I feel wait for some cool off in the stock during the day, and from a positional perspective also the stock looks good.
Sudeep, sorry, we have 30 seconds, in fact 20 seconds. Your top call for the day, aside of fertilizers, overall, the top call for the day today.
One stock which is broken out in the last 3-4 days, it was consolidating, and yesterday there was a strong breakout, it was Power Grid. So I guess Power Grid could be bought with 326 stop loss and 346, 350 as a target on the upside.
Okay, remember Power Grid was up 3% in trade yesterday, was amongst the top 4 Nifty gainers in trade alongside Wipro. Wipro may have come off a bit today, we'll get to know about it. But here's how markets are starting this Wednesday morning. Are we seeing an upside? Yes, about 50 odd points. Nothing dramatic, but 50 odd points. So that's one thing. We'll talk to Sudeep about the call data on the 23,500 strike as well. But the markets are flattish. Banks not quite participating the way they were yesterday. So that's to be borne in mind. IT, mid caps and small caps, and then IT. The Nifty mid cap about 0.22%, small cap index about 0.57%. That's not doing too badly. Thought my voice was different. Nifty IT about 0.2% higher in trade. Okay, let's get the heat map up on the screen and see what's moving and what's not. Okay, no big losers, no big gainers. That's the trend. Even Stevens, almost even Stevens on the advanced decline. So it's a flat start. Tata Motors and Power Grid. Power Grid a top call. Yesterday was up 3% up today. Tata Motors on account of the JLR presentation, I reckon, marginally higher today. Tata Steel, IndusInd, Britannia, there is a note today, I believe, from BofA. ICICI Bank up about 0.5%, but nothing dramatic because the newsmakers are at the broader end of the spectrum and not in the large cap space. Hero MotoCorp down about 1% though. Titan reacts to that negative catalyst watch, is the top loser today. Shriram Finance was a big gainer yesterday, pulling back a little bit, and M&M pulling back a little bit. But frankly, it's about the mid caps and the small caps, or the non-Nifty names, I mean, not necessarily the large caps. The large cap space only has Titan and Power Grid on the opposite ends, and both of them less than 1%, Tamanna.
Yeah, probably all of the block deals are making more moves this morning than anything else. We should just pull up the indices before we move ahead, the mid cap and the small cap index, and see how that is faring. And the mid cap 150 flat but positive. Look at the small cap, and let's pull up the bank Nifty as well on open. Small cap 250 about 0.5% up. Bank Nifty is something that everyone has their eye on today, and that's just about positive right now. So a cautious market in that sense after the kind of run up we've had. But what is really moving this morning is Indus Towers. Indus Towers and Vodafone, we should pull both of those. The bulk of the block deals have already been executed, so we have to wait and see how that pairs out. I think the names of those who have bought will be in focus, both in the red right now. Indus Towers more so 2.5% down, and obviously because there's a big stake sale which is taking place, so that is bound to happen. The question is, does it bounce back quite aggressively? Sansera, Gland Pharma, ZF Commercial, all of these three, because they are also in the midst of block deals. Look at how Sansera is responding despite those stakes, those big block deals. 6% up. ZF Commercial about 7.5%, 8% down, and Gland Pharma also in the red. The other set of stocks, or one stock that I want to look at, is Zomato. UBS, and we didn't talk about this earlier, but UBS has a note out with a target price of 250 rupees on Zomato. Remember, Zomato is in talks with Paytm to buy their ticketing business. I don't know if we can quickly pull up Paytm as well, but we should see what Paytm has been doing. So far, it has been negative for Paytm, but positive for Zomato. Paytm flat completely, just mildly in the green at 417 this morning in trade. I want to look at IndusInd Bank and Muthoot Finance, because both have notes out from Bernstein. They've initiated coverage. In fact, Bernstein has a target price of 1,800 rupees for IndusInd Bank, and on Muthoot Finance, it has a target price of 2,000 rupees, just about 1% up. But fertilizer stocks have been in focus this morning, at least in the pre-open session. I want to see if that continues. Yes, absolutely. Fertilizers are a buzz. Look at it in a context of pre-budget rally. That sense also beginning. RCF, Chambal, Fact, all of them. I think RCF is the biggest gainer, nearly 8% up this morning. So fertilizers is the story this morning, undoubtedly, Niraj. And I reckon even what you're seeing in auto ancillaries, etc., is going to be some of those focused areas that Prime Minister has spoken about.
Yeah, very, very likely, Tamanna. Very likely that is the case, because you are absolutely right. That's essentially the focus of the market this morning. I mean, the RCS of the world are really having a field day in trade. But ZF top loser. Defense, is it coming off a bit today? Mazgon, at least I saw. Maybe a bit of profit booking here. Mazgon dog about 3%, nothing dramatic. Maybe GRSC and Cochin should come up on your screen too. A bit of a pullback really. Nothing dramatic, like I said, but a bit of a pullback nevertheless. Okay, opening thoughts. Sudeep, to you first. What's standing out in the first 4-5 minutes of trade?
Yes, some profit booking that we are seeing in these defense names, mid caps. But fertilizer once again standing out. A few of the financial names and chemical names. So Rallis has given a good breakout on the upside now. Rallis also in the last few days was consolidating after that big move in the past week. So I feel from the current levels, Rallis also looks good. And overall, the fertilizer as well as the chemical space, I guess it's bouncing back today once again.
Yep, there's a nice note on chemicals from Daulat Capital. We'll get to that in a moment as well. Avinash, for somebody who wants to put in money to work, is there a stock at the broader end of the spectrum that you might have invested in recently or recommended to your clients recently?
I think stocks like Samvardhana, Motherson, I think Niraj look pretty interesting, considering the fact that both in the domestic and the international markets, traction has been very solid. So I think Samvardhana, Motherson, even at the current odd levels, can definitely be considered. Although the stock has moved up, our sense is that hopefully FY25 should be a lot better, and we could see levels of around 230, 240 here. And I think within the large cap space, Niraj, I would not like to ignore two large names like Mahindra and Tata Motors. I think M&M came out with a very strong kind of outlook in their management call, and I think that definitely is a stock where possibly we could see levels of 32, 3300. So I think Tata Motors has now said very clearly JLR is going to generate a free cash flow, which is going to be extremely solid. Plus new products are going to be lined up in FY25. So I think, these are also names which I think one should obviously look at on every decline. I think these are bets which should do exceedingly well in the coming financial year.
Okay. Exceedingly well in the coming financial year. What is doing exceedingly well today, I must say. By the way, the market, a lot of broader spectrum stocks are coming off. But what continues to do well is Ramkrishna Forgings. Big move yesterday, continues to do well today. So watch out for that one. Quick Heal had an inter-se promoter transfer. I don't know why the street got so excited about that. The stock was up 10% today, rightfully coming off in the session today. So yesterday, down about 3%.
10% yesterday.
10% yesterday because of an inter-se promoter transfer. Don't know why the street got excited because of that, but be that as it may, down about 3% today. So watch that in mind. But Tamanna is absolutely right. It's fertilizers which are doing well. But maybe Sudeep, I want to come to an auto anch name, Ramkrishna Forgings. Up yesterday, up today. How does it look on the charts?
Niraj, the stock has given a good breakout on the upside. Now, since December 2023, the stock has been consolidating between this 810 and 690, 680 mark. And yesterday we have seen a good breakout on the upside, and today there is some follow-up buying also. So I feel this breakout can stay longer, and we feel that this trend can still get further strengthened from the current levels. So overall, 800, 810 now will act as a strong support until this is held. Upside up to 890, 925 can be witnessed in this.
I just want to see what's happening with our defense pack this morning. Paras Defense, let's look at whether, there's even more sort of fuel left. Yeah, I mean, after 2 days of 20% up move, Paras Defense about 8% up this morning as well. Cochin Shipyard, let's take a look at what's happening there. Mazgao, BDL, BEL. Okay, Cochin Shipyard seeing a bit of a pullback. HAL also mildly down, about 1.5%. Mazgao Dock giving some opportunities here to buy. BEL as well down. It's just Paras Defense. Paras Defense on its own trajectory, one way or the other. So, last couple of days we've been speaking to people and asking them, are we done with the defense sort of spurt for now? But they've been saying that no, there's opportunity for more and buy on dips. Are we seeing a dip in some of these players? Would you consider acquisitions at these levels?
The way these defense names have moved too fast, I feel there is a case for consolidation from the current levels. Obviously, the trend is strong while the stocks are at the lifetime highs. The trend would be any day stronger only. But the speed with which it has moved in the last couple of weeks and prior also in the last 6 months, the pace of the up move, I guess now it's time for consolidation. And you need to have a reality check and because at the current levels, the risk-reward ratio does not seem favorable. So I feel at least if not a price-wise correction, then a time-wise correction is essential. The stocks need to consolidate, and then we can add these names on those consolidation dips.
All right. What about you, Avinash? Are you still bullish on some of those defense names?
Yeah, I think, Tamanna, I think we continue to be positive on stocks like Bharat Electronics. Our sense is that, this is one of those stocks where the legroom for upside is still quite solid, considering the fact that, they've got a 75,000 crore order book. Any decline should be used as a good opportunity to accumulate. We believe that around 350, 360 is the near-term target for Bharat Electronics. And hopefully, once the budget is announced, we are expecting some more fireworks. I think some big announcements could be made this time. And I think that is definitely going to benefit the larger names like Bharat Electronics, something like a Bharat Dynamics, and most importantly, HAL, which now is likely to get a 45,000 crore order from the new light combat aircrafts. So I think these are very large opportunities which could give, good amount of visibility for the next, 2 to 3 years going forward.
So, we've just follow up for you, Avinash. We've identified defense as, I'm talking about the pre-budget rally and the pre-budget sort of play that our viewers can look at. We've identified defense stocks. We've identified fertilizer as one clutch. What other spaces are there that you would look at very, very closely?
No, I think power is one area where I think the government could announce major reforms, power distribution, power financing. So I think, companies which are in the generating space, companies which are into the distribution space, specifically companies like Tata Power, or for that reason in the transmission tower space, something like a KEC International. I think you're going to see a lot of action in the power generating basket, as well as in the power distribution and the power finance basket. So I think, this could be a good opportunity for people who want to take a call. Plus on electric vehicles, I think, Tamanna, there could be a lot of news flow. Companies which are already into electric vehicle spare parts or electric vehicle chargers, these could be companies which should be on your watch list.
Okay, well, as we speak, of course, banks are moving up. Tamanna just noted that while we started off flattish, I wonder if the bank Nifty is actually showing an uptick now, because private banks have come to the rescue, if you will. 0.8% again for the Nifty bank, I presume. And this is led by private banks today, though PSU banks are in the green too. But IndusInd Bank, HDFC Bank are all doing well. Now, Sudeep, 50871, banks are powering or trying to power the market ahead. Would you take a fresh long at this hour on the bank Nifty?
Yes, Niraj. See, our take was that only that bank Nifty could hit 51,200, 51,400 on the upside. And yesterday also there were signs of like breakout. And today, for the first 15 minutes, we are seeing this up move, also the follow-up move since yesterday. So overall, yes, immediately we might not see that 51,200 or 51,400 levels, but we might consolidate now between 50,500, 50,900, 950 kind of zones. And we feel that depth should be used to go long, specifically now along with HDFC Bank, which is already strong. ICICI Bank is now getting signs of a decent breakout. Small last 5-6 days it was consolidating. It was a minor consolidation between 1102 and 1125. And today we are seeing some kind of a breakout from that consolidation range. So I think yes, ICICI Bank can support Bank Nifty, and Bank Nifty could see levels of 51,200 to 51,500 in the coming few days.
All right, so we'll take a very quick break at this point, but thank you so much, Sudeep and Avinash, for joining us today. We've had a good start to the markets, no doubt. And those block deals are also settling in. Just quick look at Vodafone and Indus before we get into that break, since that's the story of this morning, and see what's happening there. Indus Towers, as expected, done in the red. Most of those block deals have been executed. Vodafone as well as Bharti Airtel. All three in negative territory. Nothing massive though, one must say. On the other side, we speak with Orient Pro Solutions. They have received an payment aggregator license from the RBI. What does it mean for the company? More on that with Ashish Rai on the other side of this break. right, we're talking about Orient Pro Solutions this morning. Ashish Rai, the CEO, is joining us for more. So now what's the sort of the news trigger? Orient Pro Payments, which is a subsidiary of Orient Pro Solutions, has received final authorization from the Reserve Bank of India to operate as an online payment aggregator through its payments brand OroPay. So you're going to have one more in a market which is quite fragmented, honestly. Ashish, let me start with that question. Congratulations on the payment aggregator license. And, that's really the first question that comes to mind. How does this change things for you? And how do you make a market what is honestly quite a fragmented market with a lot of players right now?
Yeah. Hi, good morning, Tamanna. Thank you for having us. Look, I think the goal is not to create a first order sort of value here. The goal is to really create an end-to-end solution. So what we are out to build is a highly specialized next generation digital payments player that brings together Orient Pro's strengths in building out, end-to-end solutions together with a payments capability that really adds value, right? So what we've generally seen is, the first order value capture is just running the transactions. That's never that significant. And you're right, there are a lot of players there. But the second order value capture is where you create a lot of value both for the end client. So we are a very prominent player in transit, where we have one of the most integrated end-to-end stacks in the space. We are a major player in India. And then we run the transactions through gateways that we own. That adds to the margin profile, that adds to the end-to-end sort of solution value, right? So the goal is to create a highly specialized player that is very, very differentiated from what else is out there in the market.
How would that differentiation look? How would that pan out, Ashish? You mentioned 2 or 3 pockets which create higher value. Can you elaborate on that? Because that's where the game is, isn't it?
Yeah, it is. And you're right? So basically, the initial focus for us is going to be on use cases where we are already a prominent player in. So that's more centered around, B2B payments, simplifying both around receivables, payables, where we already are present with a lot of software offerings and platforms. The other is transit, where we already present as a prominent player. For example, we service, UP Transport, one of the largest bus organizations in the world, Haryana Transport, etc. Right? So we basically go through where we are already present and create differentiated value there. And of course, over the long run, you can go out and expand the use cases as you go.
Ashish, good morning. Viewers, just for putting this into perspective, something happened with the market recognition of what Orient Pro must be trying to do. Because if you look at Orient Pro charts over the last 2 years or 3 years or 5 years, you will see suddenly from April or March 2023, the stock has gone into a tizzy. Now, Ashish, I would love to understand, there are some notes that we read which speak about how for a player which is sub $100 million revenue, you've done a number of things which a market may not expect. Some tie-ups, MasterCard, what have you, and the kind of deals that you might be cracking. Just love to understand, how do you visualize, as the person who is heading this firm and leading it into its new orbit, how do you visualize the next 4 to 5 years for Orient Pro from where you are right now, both in terms of the work that you're doing and 2, in terms of what it could turn out into numbers?
Niraj, thank you. Great questions. First of all, just minor clarification, we are no longer a sub $100 million player.
Okay.
Right. So we crossed it. The guidance this year is to go to 1150 to 1200 crores, right? So where we'll be. You're right. We're still probably a fairly small player in what is a giant industry. I think the difference for us, so we pivoted the business away from a fairly diversified, IT services play about, let's say, 3.5, 4 years back, into a very sharply focused products and platforms player, which can play on a global scale. We chose bets where, we thought there was something fundamentally transformative happening in the space, so that the demand runway we can see 5-7 years out. For example, closed loop to open loop transition in the transit side, corporate banking, transaction banking, the transformation, right? So we're betting on spaces which have long demand runways. The focus is on creating globally competitive tier 1 products that can go out and take share globally. And I think that is the recognition from the market that you're talking about. That it's still early days. It's been 3.5 years since we pivoted, and of course, we've been growing at a CAGR of 35% and doing, EBITDAs at 22 odd, which I think the market sort of respects. But I think it's still a long play to create a global tech powerhouse. We have a stated ambition in terms of our Vision 2030 to be a top 3 global player in each of the spaces that we've chosen, and we are out to play that game. I think we've got a strong ticket to play that game, and time will tell, how successful we get.
Okay, so can I extend that point? I'm not asking you for a formal guidance, but if you want to be a top 3 player, and let's assume you are number 3 and not necessarily number 2 or number 1, I'm giving you that leeway. If you're a top 3 player in each of those segments, what does it take your company size to? Because you're right, you're growing at 30% CAGR on the revenue front. On the bottom line front, you're doing even better. And maybe that's because of some of the past issues that happened, the depreciation in 2021, what have you. I'm just trying to understand from where you are right now in 2024, just above that $100 million mark, what do you become if you become top 3 in each of those segments?
Yeah, so Niraj, I think... Look, the externally published, we've not published a forward guidance that far out, and being a sort of responsible firm, we won't. But the way to look at it is this, right? I think each of these spaces, whether it's the transformation on the corporate banking side, whether it's we think the entire world will move from closed loop to open loop on the transit side over the next, let's say 5-7 years. Whether it's data centers and cloud, where we've got one of the strongest propositions in the business. Each of these spaces is a double-digit billion-dollar space. Enterprise AI, where we're betting hugely, is probably a $1 trillion space, right? So the goal is not to say what you could become by 2030, because, of course, if you just kept doing 30-35% CAGR for till 2030, you'll probably not be a top 3 global player, right? So the long term, over 2030, the goal is to go out and contest for global leadership. The short term, we keep guiding 30-35% because we think that's a disciplined way of growing the business rather than trying to bite more than you can chew, right? So I think that is the idea. At some point, you will hit an inflection point where some of these spaces you can really take the growth up, right? When we feel comfortable about scaling the enterprise at a faster pace, and we are not carrying any major risks to delivery reputations and all that stuff, right? So I think that is the way to look about it. Each of these spaces is a double-digit, multi-billion-dollar space. And a top 3 global player would be a very prominent player. We're thankful, there's some investors who are willing to bet on us and join us on the journey to create this enterprise. And we believe very strongly that, eventually Indian IT has to move away from, pure services play into creating your own IP, creating our own products, creating our own brands. And we are out to sort of make that difference a little bit.
To that end, Ashish, what is going to be the R&D focus for FY25? I know it's always been between 8 to 10% of your overall revenues. Can you give us a sense there? Also, was interested to know about Arya.ai and how you're integrating it into this entire plan.
Yeah, so Tamanna, what we are doing is R&D. Typically, the way we run our business is we expense out all our R&D. So the 22% EBITDA comes out net of expense R&D, right? We are spending this year we're planning to spend this year about 110 to 115 crores on R&D spend. Last year, that number was at about 83 crores, right? So it's a significant part, about 9.5% of the firm's top line goes into creating new products, creating new solutions. Arya.ai is a very specialized place. So as you've seen over the last couple of years, at least, there is a lot of talk about AI. On one side, you have the Gen AI place where, there's a lot of investment going into foundation models, LLMs, which is all good. There may be a few winners out of that game. But by and large, that is one end of the play. The second end of the play where we are focused on, and we don't see too many players focused on, is how do you create value for the enterprise in addition to all the Gen AI plays out there, right? Which is where we already provide applications to banks, for example, where you're using, mission critical applications to run your business processes, right? How do you really bring together a grown-up AI ML capability at every point on the business workflow? It could be fully autonomous agents. It could be a human assisted by an ML model. It could be predictive models going in, but actually create value at that level in the enterprise. If you look at evolution of any technology, ultimately a lot of value capture happens on the application layer, right? And I think that is where we are good at. That is what we are out to build. And Arya.ai adds immensely to that capability for us to bring together an enterprise application stack with a grown-up ML, AI ML stack, right? I think that's essentially what the play is.
Okay. Well, Ashish, at some point of time, we'll probably do a longer conversation on all of these things because a lot of it is very new age and deserves more explanation time. But for today, we'll have to call it a day because there's only as much time on the show today. But lovely talking to you, Ashish, and we wish you all the best for this aspirational goal till 2030. May you be not just in the top 3, but within the kissing distance of being the top player as well. Thank you for joining in today.
Thank you. Thank you.
That's Orient Pro, and just want to lay it out again that the stock has had a massive run in the last 12 to 18 odd months. Something happened, like I said, post-March 2023. The 12-month chart also doesn't do justice. If you look at maybe a slightly longer term chart, you will see a complete flat line till March or April 2023, and then a near vertical takeoff from 300 rupees to currently what, 28.53. It's been a mammoth run for Orient Pro. Anyways, good talking to the company. We take a short break now. On the other side, we bring you a conversation with Blue Jet Health's CEO, VK Singh. The reason why we're doing this is we are starting to talk to companies in which institutions are taking an interest. Blue Jet is one such company. Stay back and hear about the company's prospects. Thanks for tuning into this broadcast. What we are trying to do now over the course of the next few days is try and focus on companies in which there has been new or substantial institutional interest that has gotten formed. Now, Blue Jet Healthcare is a company in focus. Aside of a specialized pharmaceutical fund which owns the stock in some way, we also spoke to the portfolio management services division of JM Financial, Vinay Jaising, who also owns Blue Jet in their portfolio. So let's get in Mr. VK Singh, the CEO of the company, to try and tell us a bit more about Blue Jet. What do they do and what are the growth targets going ahead? Mr. Singh, great having you. Thanks for taking the time out. Can you tell us a bit about Blue Jet Healthcare? I believe you have 3 lines of businesses. Would love to understand in depth what the company is all about and what are the targets going ahead.
Very good. Thank you so much for having me. It's a pleasure to be with you here. Blue Jet should be seen as a very boutique CDMO. The company has a legacy of about 55 years, and we have been in existence for about 55 years. Primarily, performance chemical company orientated towards the healthcare segment. So we have 3 broad product verticals. We have the contrast media. Contrast media is a part of the diagnostic segment, which is a subset of the medtech industry. Then we have the high intensity sweetener segment. And in that segment, our focus is more towards the extremely, MNC driven sticky part of the business. That's the beverage and the FMCG sector. And then we have a third segment, which is typically hardcore chemical CDMO business, where we focus on manufacturing intermediates to APIs and sometimes the final APIs, depending upon customer requirement and demand. I would say that the segments that we are in are very niche, and all of them are sunrise segments. If you look at contrast media, what we supply goes into diagnostics, and diagnostics is an overall part of the medtech industry with a very high element of drug and device coupling because they get into the machines, and it's the contrast media coupled with the efficiency of the machine that provides a clear image of the body when we are getting into some diagnostic procedure like a CT scan or MRI. This market is very highly underpenetrated, and I think there are good tailwinds as far as opportunities for growth is concerned. If you look at our second segment, where we are in the high intensity sweetener segment, that segment also, the part of that segment that we are operating in, that's the MNC driven FMCG segment. I think there's a lot of stickiness in that business, and most of the business is, contract driven. So we see good amount of visibility of this business for the next several years. The third segment, CDMO, that's a big market. That's a $80-90 billion opportunity. And we have some extremely good customer lock-ins, businesses and opportunities and launches that are backed by long-term contracts and supply agreements. And here our focus again is towards a niche, which is cardiovascular, oncology, and CNS. So I think that the segments that we are in and we are operating, all these segments are, high growth segments. So we believe that we are in extremely good space, particularly in contrast media, where the industry is more than 100-year-old, but has still not witnessed genericization. So I think it's a very good space to be in.
If I'm not wrong, contrast media is between 65 and 70%. I heard you say that you laid emphasis there. Is this the part of the business that will drive growth for the next 2 or 3 years? Or could pharma intermediates, and I hear that CDMO could finally see some bit of green shoots or blue skies yet again in the second half of the year, but it's only about 14-15% of your business, if I'm not wrong. So what drives business, Mr. Singh, over the course of the next 2-3 years?
If you, just step back and see, then the DNA of the contrast media business, the way we do, and the CDMO part of the business, they are both same.
Okay.
And the products that we are in, the chemistry platforms are common and shared. But this is very true that contrast media will continue to be the mainstay of the company. Having said that, what you mentioned is also true, that there's a lot of traction that we are seeing in the CDMO part because of various sorts of tailwinds. There is a China plus one, so we see good opportunities. We see a lot of increase in the RFPs. Besides that, whatever was incubated about 3 to 4 years back, because we support a lot of our clients in their NCE development. That is leading to getting to a stage where that's going to fructify and get to the commercial stage. So having said that, we believe that the third segment, that's the CDMO segment or the pharma intermediate segment, that should see some very good traction. So while contrast media will continue to be the mainstay, I think the PI and sweetener segment both will be growing, and the percentages would balance a little bit.
So you mean not too much of a deviation from where the business mix is currently? Is that a fair assessment of your statement?
There will be a change of the percentage of the mix, which does not mean that contrast media will not continue to be the mainstay of the company.
Okay, but it may not be 65-70%, it could be slightly lower.
Indeed, yes.
So does the pharma intermediate segment go higher? Because I believe you have some new launches, some capacities out there.
We have some very good launches in the offing, and because of which we believe that, so we as a policy refrain from giving any guidance, but what I would not shy from saying is that this could very well be a watershed year.
FY25 could be a watershed year, you're saying? Okay, and just to get clarity there, and then I'll move on to, of course, the different segments as well. But when you say it's a watershed year, it's in terms of the performance showing in the numbers as well, or would you believe that this will be the building blocks of what enables you to show the performance starting FY26?
Both.
Okay, fine, noted. On the contrast media segment, Mr. Singh, there is. I believe you've spoken about forward integration in contrast media. At the same time, there's also talk of backward integration, whether in contrast media or the other segments, I'm not quite sure. So I would love to get some clarity there. And would a larger part of the capex that you're doing, I believe 200 crores FY25, 200 crores FY26, is it larger towards the contrast media, or is it happening across the segments?
So, there is in contrast media or any segment, there is a certain baseline growth. That's something like a secular growth.
Okay.
And in contrast media also, there is going to be some secular growth because the segment itself is growing. But then the way our business is designed, we are supplying intermediates. And the moment we supply an advanced intermediate, the next level, we get a quantum jump in the value, right? So we should be able to beat the industry growth rate. And because of the forward integration play that's available to us, and because of the customer lock-ins that we have, so I guess the next few years are good.
Okay. But the capex you sorry, I'm just trying to get the clarity. This capex that you're doing, some of it is coming on stream, but you're doing 200 crores of capex, if I'm not wrong, each year for the next 2 years as well, just like your way you did in FY24. Is it happening concentrated in a particular segment?
I think FY24 was 230 or 250 crores.
Okay.
But to be a bit conservative, I would say that the baseline capex will be year on year 200 crores.
Okay.
Give or take, could be slightly more as well. But I think it's a safe assumption that the baseline capex will be 200 crores. It's not going to be heavily orientated towards contrast media. It's going to be, evenly spread towards all the segments.
Okay.
However, having said that, we must clarify that the way our plants are designed, the capacities are fungible at the reactor level.
Okay.
It's not that and at the outset, I said that we often share common chemistry platforms. So it's not that one capacity cannot be used for something else. It is just that while the DNA or the way the business is done with clients, it is very similar across the three segments. It's just that because of a predominance of a particular sector, just for ease of communication, we have divided them into three product categories.
Bank Nifty is trading at life highs, so there is a record high in the session today, and watch out for that particular part of the market because that is propelling the indices higher. We were all through the last few days, we've been talking about what other sector, which in the large cap space comes to the fore and takes the market higher. Now we're seeing first signs of the Bank Nifty participating. 2 days on a trot now. The banks have been doing very well and really good going. Thanks for tuning in to Talking Point. I'm Niraj Shah. Our guest today is Ajay Tyagi, Head of Equity at UTI AMC. And Ajay, thanks so much for taking the time out and being with us. Can I start off with a subset of the market because the Bank Nifty is doing what it is doing, is trading, has hit life highs today. 2-3 days on a trot now, they're participating. Is this the market trying to get different legs into the fore and banks having not rallied coming to the fore? And are you constructive on banks currently or not quite?
In fact, I would say that this is the only part of the market which has been trading at valuations lower than the average of the last 5 years, 10 years, even 15 years. As we are all aware, most parts of the market are trading at a premium to the historical averages. If you break up the financials, I would say the private sector banks in particular haven't really participated in the rally at all. Public sector banks have still done well. But as a composite, I would still agree to your view that this is that one subset of the market which hasn't participated, and valuations are certainly in their favor. Business models are as robust as they were in the previous decade. Credit growth, to my mind, will track slightly higher than what it was over the previous decade. So I think most vectors are favorable, including valuations.
So for the longest time, banks per se, at least private banks, haven't quite done well. 4 years in a trot now, we've had underperformance of private banks vis-a-vis public sector banks. Is it time that they might do? Can this reverse, if you will? Or do you reckon both PSU banks and private banks could do very well in times to come?
See, as things stand today, let's look at two things which are very important for banks. One is, what's the situation on the non-performing assets? Non-performing assets today for the banking system as a whole is at a multi-decade low. The second thing, which is a second order impact on banks, is how's the situation of debt for corporate India. So debt to equity for corporate India also is at a multi-decade low. And the third thing is basically what's the view on growth. Like I mentioned, credit growth seems to be fairly strong going into this current decade and would track slightly higher than what it used to be in the previous decade. So from that perspective, I think the layout for both private sector banks and public sector banks is strong. Now comes the relative play between the two. And I would say here that while PSU banks certainly are much better placed compared to what they were starting 2010, 11, 12, when we saw the beginning of this crisis in terms of NPAs in a lot of these infrastructure sectors, power, roads, and so on. So that baggage is not there. But the valuations are clearly tilted in favor of private sector banks. I mean, in the last 2 decades or more, I would say that we have never seen private sector banks trade at a premium to PSU banks as low as it is today. There's hardly any gap, by the way. So I think that itself, to my mind, tilts the equation in favor of the private sector banks.
Okay, so you do reckon that private sector banks, by virtue of all the things that have happened in the past and even now, deserve to continue to trade at a premium to PSU banks?
Absolutely, yes. Absolutely. I mean, there's a world of a difference in terms of their core operating metrics. Look at just one operating metrics which condenses everything together. Return on assets. Return on assets for the best of breed PSU bank in the country, which is SBI, is 1.1. The return on assets amongst the large private sector banks is in the ballpark of 1.8 to 2%. So that just tells you everything.
Okay, fair call. The other thing is other financiers. A lot of people, like today we were talking to somebody on the buy side who was talking about how relative to private banks, maybe financiers, maybe insurance companies, maybe some of the capital marketplace might be better placed for a retail investor. Not a fund which is, let's say, have to meet benchmarks, but per se, if I'm agnostic about the benchmarks and if my pool is not very large so that liquidity is not as big a concern, buck for buck, non-lending financials give a better probability of gains versus private banks as well. You second that?
See, I'll be slightly tentative here, Niraj. And there are multiple reasons for this. One is that I think we are still not very sure about the regulatory landscape on these non-lending finances, because essentially we're talking about insurance companies, we're talking about asset management companies. And we have seen some bit of regulatory headwind on both of these subsectors for some time now, the latest one being the insurance sector. That's point number one. Point number two is that, you see, when it comes to private sector banks or certain large PSU banks, you're really talking about financial conglomerates here, which have multiple engines of growth. By the way, many of these asset managers and insurance companies are also part of these financial conglomerates. So I would say that the better way to actually participate in financialization of savings as well as credit growth in the country is being a long-term investor into some of these institutions. So I would prefer that. When it comes to asset managers, please don't forget there is this huge debate of active versus passive. India is at least a decade behind the developed markets. In the developed markets, passive has gone as high as 50%. That has consequences on yields and profitability. So we will get there at some stage. So there's going to be a slow burn on our profitability. But this is the global trend, and I don't think India can defy that global trend.
Okay, so viewers, the first point is that today's talking point has to be about what banks are doing and how they're coming up. And Ajay Tyagi, head of equity at UTI AMC, believes that the time may be ripe for private sector banks to actually now start a period of outperformance relative to the public sector banks as well. The Nifty bank has hit record highs, and the reasons are many, as he's just outlined. But principally, the premium that the private sector banks enjoy over PSU banks is the lowest in the last 2 decades, if I'm not wrong. And therefore, that is enough reason for private sector banks now to get a serious look, if you believe that financials are going to be the key sector going ahead. Now, just a word really, financials are scaling up the markets. Every single day, we are hitting new highs, so to say. At some point of time, I mean, people will say that the naysayers were negative at 21,500 also. They are negative at 23,500, but there's a chasm of difference in valuations between those two levels, right? At these levels, do valuations spark a serious concern about a further up move in the markets?
So minus the adjective that you used, I would say yes, it's a concern.
Serious. Okay.
So I would say, rather than being economical with words, our view at UTI has been that the valuations at which the markets are trading today does load the dice unfavorably for investors, at least from a 12-month perspective. Look, when it comes to investors who are looking at a 5-year horizon and beyond, we always say that stay invested, you can't time the market, it's almost impossible to get in and get out. But it certainly appears to us, given where the valuations are, given where the excitement level is, given where the F&O participation is, so there are these multiple things which are indicating to us that valuations are unfavorable right now. We won't be surprised if markets correct 10%. We won't be surprised at all if markets move sideways for the next 12 months because the valuations are suggesting us that. So, I mean, if I take the valuation picture aside, I would echo what most other people have been saying, which is that India hasn't been as robust in terms of its fundamental outlook ever. The only weak link is the fiscal deficit, and I do hope that the government would be addressing that. There's a glide path that the finance minister has committed the country towards, and I hope that we will be sliding down that glide path.
I thought that with the RBI dividend in play, that is not a question at all, Ajay?
Life changes sometimes within 24 hours. It wasn't a question at all pre the political outcomes in this country, but post that, it does appear that the government may have to loosen their purse strings. They may have to actually dole out money for, let's say, bottom of the pyramid. So it may have some strain on the fisc. The good news is tax collections remain robust. So that's why I'm saying that given the puts and takes around this equation, looks like, we would be able to still adhere to the glide path.
Okay. With an assumption that all of that happens, is the market, and with the earning growth assumptions that you might have for your portfolio companies per se, or the overall markets maybe, because you're benchmarked to the index, Ajay, would you be a confident buyer at a lower level, or would you be a buyer after a period of time if the market were to consolidate? Because earnings will catch up at some point of time in the next couple of quarters too, right? To the multiples.
Sure, that's a good question. And Niraj, essentially, we're trying to reach to the same level. If there is a price correction by 5-10%, it makes the equation favorable. If prices don't correct but remain sideways, but in the meantime, earnings catch up, it again brings the valuations down to a more favorable position. So yeah, essentially we're talking about the same. And my answer would be that, whether the markets correct outrightly or they consolidate and therefore there is a time correction, our comfort levels would increase.
I get your point. Okay. Now, it may well happen, Ajay, that the markets may consolidate, but specific pockets may do well. I mean, everybody wrote off defense. The stocks have been on steroids, really. There, I don't think you will tell me to mask my words because really the sector has gone through the roof. But my limited question is, let's assume that the markets are consolidating sideways to maybe minor corrective move as well. Where is it that you believe the chances of outperformance is higher based on either policy, based on earnings flow, or based on flows that the market may be seeing, given the promise that the sector may hold for the future?
Sure. So, the way we always approach the equation is that we're always oriented more towards the outcomes of businesses rather than trying to take a view on where could the flows, land up. Okay. So we are I would say we are always oriented towards, do we understand this business? Do we understand the outcomes of the business? Do we understand what's going to either hit the business or it's going to act as wind in the sails and so on? Now, from that perspective, I would say that there are 2 or 3 quarters of the market which look positive to us. We've already spoken about the banking sector. And we did talk about the sector in detail. Valuations are favorable. The construct in terms of growth per se is as strong as it always was. The second sector which we think should now be favorably positioned is the consumption sector, which has many facets. It has consumer durables, it has consumer discretionary, it also has consumer staples. Now, consumption has been weak in this country, and we all have seen the dissected GDP data, which talks about the consumption leg being very poor all through the last, I would say, almost 8 quarters now. 2 things. One, what we have observed in India is that consumption, while it's a structural growth trend, but it too does have its own cycles. We feel that consumption today is at the bottom of this cycle. That's point number 1. So regardless of the exogenous variables, consumption ought to be witnessing an uptick. Point number 2, I think, again, let me go back to what happened at the hustings and the outcomes of that. I think the government does realize that they've actually put in a lot of money behind infrastructure, rightfully so. It has the maximum multiplier impact, but they also cannot neglect the consumer part of the economy. They cannot neglect the consumer at large. So our feeling is that they would be, the government will find ways to put money into the pockets of consumers. That would be the immediate impact on revival in consumption and the different facets that I just spoke about. By the way, valuations in this sector compared to their historical averages are at par or maybe slightly lower in certain pockets. So I think this is the second one. The third one, where we feel that there is a very strong structural growth story and yet valuations are not at crazy levels, is the healthcare sector. And here too there are multiple dimensions to the healthcare sector. We have the pharmaceutical sector, which is very domestic oriented. We have the hospitals, where the government has realized that, look, we can't spend as much money as the private sector hospitals can, and therefore we must support them. We also have a small subset of healthcare, which is diagnostic companies. And last but not the least, we have discovered that China plus one can be a big opportunity for a lot of these export-oriented players who can partner with the big pharma. So I think that's another sector where we are finding opportunities. I'm not saying valuations are very attractive, but the valuations are not, outlandish.
Okay. Well, talking about the bit of a here and now as well before we hit that break. Remember, as we've said, that banks are in the thick of things, but telecom is in news as well. Let me get in my colleague Rucha to talk about the big development in the telecom space today, which is the Vodafone Group divesting the stake in Indus Tower. Rucha, what updates do you have?
Thanks, Niraj. So Vodafone has divested 19% stake in Indus Towers, and it now holds around 2% stake via Indian entities. So it has sold its entire holding via its foreign entities. Now this involves a cash flow of more than 16,000 crore rupees, and now Bharti holds the highest stake in Indus Towers of around 48%. Now the use cases for Voda Idea from this cash flow could be number one. Now it had pledged this stake in Indus Towers against a bank borrowing of 4,500, which is the cap number. So this stake sale would likely involve the repayment of this bank borrowings. Number two is that the payment of Idea's dues to Indus, which is capped at around 6,500 crore, could also be paid off to Indus Towers, and this could involve more cash flow to Indus Towers. Now Indus Towers has not paid dividends since May 2022, and brokerages believe that this increased cash flow could enable Indus Towers to give dividends to its shareholders. Also, UBS believes that $500 million of this entire transaction could be infused in the Vodafone business by the company. So Indus Towers likely will give more dividends. That's what brokerage house believes.
Got it. Okay. Well, that's the view on telecom as well. So that's the other sector in focus. Ajay, very quickly before we take that break, any thoughts here?
So I would say this sector is undergoing consolidation, as we have all seen over the last many years. And I think what's important to realize is that the sector is regaining pricing power. While this transaction that we are just talking about may actually lead to Vodafone getting that lease of life, because perhaps it gets in the money to actually put in for capex and therefore retain its subscribers. Remember, they have been actually witnessing a subscriber churn significantly over the last many quarters. But the fact is that the two remaining players are now big by a big mile. It may well remain a three-player industry, and if you count the government-owned BSNL, a four-player industry. But then there are two large players, which means that the industry is fairly consolidated. It will behave almost like a duopoly with pricing power. So I think that's the big picture view that we hold on telecom. Yeah.
Okay. Take a break on that note with some very key nuggets around banking premiums and the fact that duopoly maybe, but remember there's also some gains out there maybe for Indus. In fact, Bharti Airtel has approved the acquisition of additional 2.7 crore shares in Indus